All right, what's going on, everybody? How is everyone tonight? Thank you guys for joining me. Whoa, let's turn that down. Hey guys, how's everybody doing? What a day in the markets. Again, as I continue to feel the markets might lull us to sleep, again, we get news. We have the S&Ps. Like, this market was actually, oh man, hold on 1 minute. I do apologize, guys. Give me 1 second. Forgive me, because this is a one-man show. How's that? Is that better? What's up, gang? How's everybody doing? Thank you guys for joining us tonight. This is the Ivy League live stream. As it goes down, we have Tesla, GM. We have, this is for next week. We had employment numbers today. Was that why the market went up? You heard yesterday that everybody was talking about the Canadian interest rate surprise. You know, it's to be expected to be talked about. But again, if you caught the live stream last night, if you didn't catch it, please go watch it, because there's such a great lesson that we gave last night. The markets rallied. All right, the markets ended up rallying somewhat. You know, the volatility is not necessarily there, but it is. There's opportunity. You got to know the type of environment that you're in. The base hits, the doubles, you just got to get them while you can, because next week is going to be big, and this is why we do what we do. This is why we're here, because we want to provide education for free. All right, as long as you hit the like, share, and subscribe, guys, we're going to be here, and we're going to try and help you guys get through these markets in good times, bad times. I'm not always going to be right, but we have called this market to a T, guys. Again, I'm Justin, Ivy League Livestream. Thank you guys for joining us. Hit the like, share, and subscribe. And our mission here, again, is to have a place that retail traders can go to access information, trade ideas, hang out, talk stocks, sports, whatever. All right, we're here to work. We're here to learn, because, again, I'm always a student of the market. I don't know about you, but I'm pretty sure you should recognize that we're all always students of the market, because there's always all kinds of market cycles, the changes in the market, the understanding of what the fundamentals are, and tying that all together. The news. Again, thank you guys for joining us. Hit the like, share, subscribe if you already haven't. So what are we going to get into? We're going to get into GM, Tesla, obviously the big news of the day. We have a couple stocks here. Carvana, which we were on this morning. We're going to talk about, we can get into GME because I didn't touch on it last night. There wasn't much action. I didn't even really look at it. So we will talk about, what was it, BAOL or something? Wait, see, I have all kinds of notebooks. Like, I have my notebooks for this, and let's go. This is work, gang. If you guys don't have, like, if you guys don't have notebooks of sorts with your levels and all that, BAOS. I apologize, BAOS. All right, BAOS. That was the trade that I didn't take because, again, I've been doing this for a long time. If you don't know, it is Colin, my guy. What's up, bro? Thank you so much for joining us, man. I appreciate it. Yes, we're going to get into Tesla. Bro, this is going to be a good live stream. I'm telling you, this is going to be a good live stream because of this news. All right? This news is pretty big. It's pretty big. So again, we're going to talk about BAOS and why we didn't take that trade. We're going to talk about Tesla GM. Okay? Yes, BAOS. As you can see, the old handy dandy fib. Old handy dandy fib. All right, so let's get into it, guys. Again, if you guys have any questions, comments, anything you guys want to talk about, throw it up in the chat. All right, what's first? Tesla rocketing. You're right. You got to, bro. You got to. I mean, at least have your levels and everything. And there's two things I want to get into. All right, we're going to do a couple lessons, but there's two things. I want to talk about the SPY first, and then we're going to get into Tesla, because Okay, journaling's one thing. That's right, man. You know, it's always so important to recognize not only the trades and go over your trades. You know, go over your entries, write down what you were seeing. Okay, why you thought you were on that trade, what you saw, why were you in it, what was the reason for being in it. Like not like why were you in the stock, like for as far as entries, positioning, sizes, and then what was there a catalyst? Was there like just a support level? What was it? You know, so you can look at it at all types of ways, and then put in what could you work on. You go back, you see where your entry was, your exits, how were you feeling, this, that, and the third. All right, I have, other than this, journals and my notebooks. Again, I got 3 of them. You know, so which it doesn't matter. You don't, you know, that doesn't mean shit. It doesn't mean you're going to make any money, but it is a path to success. You know, that's for sure. So I also, the big thing that I have is I keep a playbook. All right, if you guys don't know what playbooks are, you could have a playbook. I have playbooks for Fed Day. I have playbooks for CPI, which will probably like get dust on them after all this is over, and it'll be something new. And maybe I go back to it in 10, 15 years, 20 years. Who knows? Maybe I never have to go back to it. But if I do, I have the playbook. I have the playbook for Fed days. I have playbooks for CPI, the days prior, the day of, and the day after. You know, and I write down what I have on it, what day it was, so I know what the chart was the day before, the day during, and the day after. You guys, it's so important. It's kind of like sports. Football coaches have playbooks. Like, we run this play, we're getting a touchdown according to that defense. So what's a playbook? This SPY is a playbook right here. Let's go over it real quick. We had a down day yesterday. Nothing huge, nothing crazy. You know, it may seem like it because the volatility is kind of dwindled down a little bit. So what happened was we had a down day yesterday. We come in. Now, if you don't know, this turquoise line, this dotted line, is, I always have these. I have it for whatever I'm watching. I have the low, I have the close, and I have the high. And in this case, I have the open. Why do I have the open? Because if I was looking at a SPY, this would have obviously been taken up to the high, but I know the high's there because we've already hit it 3 times. So that's why that's there. But I always have the close, low, high, and open. Usually, sometimes I don't have the open because the open is not as important as the close and the low and the high. All right. If you look at a line chart, I don't know if you guys know this or not. So if you guys ever look at a line chart only prices in the close. It doesn't price in opens. It takes the close for each day and dots it and just draws a line. So the close is very important. I had this yellow dotted line also just for pre-market. This was for pre-market today. So I knew if we broke out of pre-market range or if we broke under it, I didn't have to go back and look at it. All right. Because again, if you understand what moving averages are, depending on when the move happened, you want to have, like if it's a catalyst that happened at 8 o'clock in the morning, you might want to have pre-market on with your VWAP and your non-EMA because they all play a part and they're all timed. There's always a time with your moving averages, so you need to remember that. A lot of people don't even know what the hell they are and how they're, or like, it's not that they don't know, they just don't realize that it is taking the price and time and putting it together. So if you have more time on a short-term average, that thing's going to be all over the place. Like you don't want to be, now if it works, it works. You know, that's one thing. But like you can see here, you know, VWAP played in. That's a whole another lesson for another day, guys. Anyway, so what did the SPY do today? This was a textbook playbook that if I was not in small caps and looking at the other, you know, Carvana and everything, the SPY is usually my go-to. All right. But since I've been on the live, I've been actually trading like the news because I just don't know. Technically, we don't know if, you know, the type. I have an idea, okay, because I always use the market internals in the morning. Like, well, you know, off the opening bell, I look to see where they are. All right, and I see, because this is very important, like the size, like how much volume is up versus how much is down. your advanced decline, how many stocks are going up versus how many are going down. So instead of you having to scan through the entire market or the sectors and kind of get a gauge on what's doing what, and if you're seeing that the overall market's up, it may take you a little bit. And with this, I already have an idea what the market internals are doing. Okay, you can look at it as breadth, but not necessarily breadth, but you can gauge the market environment and if it's going to be a continuation type of day or not. Are you going to get follow through? Because I use this, but I also use other things with this. This isn't enough, guys. Okay, and we can teach you that. Just like, share, and subscribe. We can teach you all that, and I think you're going to find a lot of this information very useful, very, very useful. All right, so we're going to go into the SPY real quick, gang. I want to show you guys. This is a perfect textbook playbook. I have this as a playbook. All right, I have this. I know this. What happened? This is a 3-minute chart. So we had a down day yesterday. We opened damn near where we closed. Look at this. This is the close. Look where we opened, or look where we closed, and look where we opened. All right, this is kind of difficult, but look, right here, we opened at 426. 426, roughly 426.62 if you want to be exact. And what was the close yesterday? The close yesterday was at 460 or 426.60. So a few cents higher, guys. So you just overnight futures just put in a range. All right. I said watch positioning. We could just I was expecting a range to be put in. I was hoping it was going to be more of a range, but we haven't had news for this market to move. Certain sectors, certain stocks, because of news, they will move. But the overall market, the S&Ps, the Qs and stuff, we haven't had a catalyst to really take this market anywhere. But we had a catalyst today. What was that catalyst? Let's go over it, because that's going to play right into this playbook, guys. We had initial jobless claims. Initial jobless claims ticked up to 261,000 versus a previous of 233,000. All right, the consensus were a few basis points over it. Guys, we went way over it. That's a good thing in a sense. That is, we have been going over this data night after night after night, and we've showed you on here. You can use whatever you want. Doesn't matter. It's the same information. Should be the same information. So we have noticed a slow contraction. Like the contraction's it's slow. It's the beginning stages of a contraction. So you're starting to get time under this interest rates that have been put in place, and now you're starting to slowly see the effects in different sectors, okay, in different things of the market. Look at your 8-week and 4-week. The 4-week isn't paying more than the 8-week now. Do you notice that? The 4-week was 5.9, the 8-week was 4.12. We were getting 4 weeks paying more than 8 weeks. And I did a video on the treasury bills, like the way that they word it. You can go back. I could always bring it up. But I did an educational lesson on terms, and treasuries was one of them. How different dates are called different things, So we got this. What does this initial jobless claims tell us? Okay, this tells us that we could get a slow in demand if more people are losing their job or quitting or retiring. You don't know if people are getting hurt or if the company is struggling and they got laid off or what. There's always a story about it. There's always little fractional things that happen with this data, and we don't know, but the picture is that you just had a uptick in initial jobless claims. Now, you can go into the ins and outs of it all you want, but it technically doesn't matter. This is showing that we're getting a decrease in demand, or we could start to see a decrease in demand. We are already seeing it, but this is helping us, because this is what the Fed wants to do. The Fed's ultimate goal is to price stability and maximum employment. Price stability and maximum employment. They've reached maximum employment. Have they reached price stability? I mean, it hasn't gone up anymore, but they lost control of it. Yes, they did. They lost control of price stability. So this should help, and maybe this does help bring prices down, possibly. Maybe in certain sectors, Depends on what it is that you're in, whether it's food and stuff. Everybody needs food and stuff, so I don't know how much that's going to be affected, you know. Now, home sales, you start seeing this continue to go up and up and up. New home sales they could do, new car sales that they could affect. You know, these interest rates also on top of it. Some people aren't smart enough to know that there is, you know, different times and seasons when you should be buying and getting a loan. And if you maybe, you know, and a lot of times it's that people need it. So it doesn't matter what the interest rates are. If they need a vehicle and they need a loan to get back and they have a job, technically they're going to get it, because they're not going to care and say, well, I can just push my job. I can just push it back from me going back and forth to work and all the things that I need to do when interest rates are down. It's not like you can just push your life off and wait for interest rates to come down before you to make decisions. But again, if you want toys, or if you want to do maybe invest or something, and you have the capital but you don't want to use it, and you want to use the bank's money and you want to get a loan and whatever. Okay, whatever it is. So with this jobs data, you're starting to see a tick up in unemployment, or at least initial jobless claims. All right, so that's very important, guys. And the market rallied off of this because this is helping the Fed, or at least it was a big number, or at least a big beat. But when does it come to a point where they start talking about a recession? So I don't know. That's a little bit further on down the road. Unemployment rate is still, you know, on and kicking. The labor market's on fire. So they say. Because we all know they can say that they're hiring all they want. Don't mean they're going to call you back, or, you know, you're going to get hired. It could just be for whatever reason. Maybe they're not hiring and they just put it out there. I don't know. I'm not going to get down that rabbit hole either. So again, S&Ps, we got the initial jobless claims. So what happened? The S&Ps went up today. The S&Ps were up just under 1%, or just over 0.5%. All right, so let's get into it, gang. Let me zoom in. This is a playbook. This is off our playbook. All right. I do this for a reason. I put my lows, close, high, and I usually don't put the open, but I will if it's like we're below it and I want to know where the open price was of yesterday, then I'll just move it up. All right. I wasn't really watching the SPY. I mean, I always have the SPY to the left. If you join us, we're live Monday through Friday. YouTube.com, Ivy League Trading, 7:30 to 4. Sometimes we might come on at 7, but 7:30 to 4. All right? Like, share, and subscribe. It's free, guys. Come join us. We have all kinds of ideas. We chat. It's a fun place to hang out. You know, you listen to it at your work. If you're at work and you just want to know what's going on with the markets, let us help you with that. Okay? That's what we're here for. All right? And we're good. We are very good at what we do. All right, this is a professional trading. This is not just, we just cover the stock market and we don't trade. Or we paper trade and we lie to you. No, my own capital, I run it. Okay, I've been doing it for about 6 years now. All right. So again, Ivy League Trading, YouTube.com, 7:30 to 4. If there's any earnings or anything, obviously we'll stay after. All right, let's get into it. Yesterday we had a down day. I got my low, close, open, or low, close, high really is the more important. So we off the bell, we test the low. Yesterday was support. Pre-market, it tried to break it, but didn't. It rallied back up and kind of held it. You'd have to go, I can go over the futures, but it's not that important. So anyway, we just put in this range. We put in yesterday afternoon's range, okay? Yesterday afternoon's range. So we sell off in the morning, and what do you guys see that we hold? We tailed it. All right, we tailed it. But we never closed below yesterday's close, guys. That is a trigger. All right, there are other things that you want to use to help you, you know, gauge your trade, whether it's a trailed stop or whatever, because who's to say you don't get some news? Who's to say you don't hit this area of resistance and sell back off like you see it tried to? There's always just different ways to manage risk. But you do know in real time that you did not close below yesterday's close on a down day. You stuck it. 369. You spent 10 minutes. Still didn't close below it. The trade goes on. All right, this is a playbook. I was watching Carvana, the BAOS, because I was hoping yesterday with the small cap that took off in the afternoon, was kind of thinking there's a possibility that small caps might take off. Wasn't necessarily the case for whatever reason. All right. Again, you can only control what you can control, and that is your risk. You can only control your risk. You look at the chart, you look at the news, you try to gauge it, you do what you can do, and you don't overextend yourself. You read and react. You read and react, gang. Again, 369. We spent just under 10 minutes at this low. Could not put a close below it. We didn't close it. Now, the close of the candles are important, guys. We closed right at it. And then we pop up only to not close below it. You just tailed it. We tailed it. And then, again, snap of the finger, we put the trade on because we know in the playbook we have a down day. The market opens up above yesterday's close on a down day. You test the prior day's low, and it doesn't break. It holds. That is telling you everything you need to know. Doesn't mean that it can't break at lunch or the afternoon. It didn't break below it, guys. That's it. The thing about playbooks is you have to take your mind out of it. Your mind is going to just come up with all kinds of scenarios. All kinds of scenarios. What if this? What if we hit VWAP? Or what if we hit the open and it sells back off? You did not close below the low. So as of then, on a down day prior, which is also important, it's on our playbook. All right? You rally. All right? You rally. The fact is, you did not close below the low. You did not put in a new low below the low. You go with the market. And you keep your mind and the what if this, what if that out of it. You have to. Read the chart. The chart says, I am not closing below the low just yet. So what's that mean? If we're not closing below the low, where's our next stop? Where's the next stop? The next stop is going to be the close. Where's the close at? The close is right at VWAP, guys. The close is right at VWAP. Okay, let me scan this in for you guys. Can you guys see that? So there's the close, and it's lined up right at VWAP, gang. Right at VWAP. So there's a little resistance there. We see a little resistance. The volume it's there. It was a very low volume type of day, guys. At that. So this was a low volume push. But it doesn't matter because we don't know at 10 o'clock if we're going to get, when it breaks VWAP, if we're going to get the, just go over, bro. So again, we don't think about if this and that. We just know that we held the close or we held the low of yesterday on a down day. So we pushed through VWAP. Look at the candle that pushes through VWAP. And we talked about this lesson yesterday. Off of what? The 9 EMA is also there, but you also get a you get a trade line VWAP cross, guys. A trade line VWAP cross. This is a bullish signal. Again, you can sit there and say, yeah, what if we close above and we hold it, we try to get back up, and then it doesn't. Well, guess what? You broke yesterday's close on an increase in on the bar. The volume was about the same, but you did push because you had traders getting in prior to VWAP, pushing this thing up, and look where this candle opened. It opened on 9 EMA, and was their signal to put the trade on. They put the trade on. They're in it. Other traders see the tape level 2 that buying action has started, and you get that. Bang. Right through VWAP. You let it be known, hey, we're going to test the upper part of this range, upper part of pre-market highs. Where do we go? Pre-market highs. We've already we blasted through yesterday's close. You pull back. Where you pull back to? You pulled back right to the 9 EMA, gang. And it was on. You could have put the trade on here because you didn't break the low. You broke above yesterday's close, above VWAP with a trade line VWAP cross, and now you're going to be looking for this top end range of pre-market. You could just trail your stops up. But at this time, with a candle like this, Even if you're not in, you know that you still have $1, roughly. Not even. You have 30 cents. It doesn't matter, guys. If you did not break the low, and yesterday's close did not become resistance, which would have been a perfect bearish signal. Look where the close is. It's literally right where we opened again. So if we had a bearish chart, we pull down, we come up, and then yesterday's close becomes resistance if it's going to be a down day. I assure you, yesterday's close is going to act as resistance, and it didn't. You freaking plowed through it. You plowed through it with a vengeance. You know, these candles tell you a story, guys. They really do. They tell you a story. Again, pull back, 9 EMA, and the race was on, guys. The race was on. You pulled back to VWAP just about roughly. Now I have pre-market on, so VWAP could be a little higher. You know, again, because of time, it's pricing in pre-market. So sometimes I use pre-market, sometimes I don't. It all depends. It all depends on what I'm trying to get out of the moving averages. All right. So as you can see, I want you guys to write this down. Or better yet, if you have if you go to TradingView or whatever brokerage you have, take a picture of this 2-day price action. Okay? 2-day price action. There's a lot here to be taught. Or not to be taught, but to recognize. Because we hit the top end resistance, had a down day, couldn't break through it, so we sell off. We held yesterday's low, blasted through yesterday's close. Where are we going now? Where are we going? Are we going to go to the open or are we going to go to the high? Well, you broke through the pre-market session, the pre-market high, so we did that. Like, nothing is stopping this thing from going up, even if you got in here, guys, like on the break and retest of pre-market highs. You were still okay. So my point is you have to get like your mindset, the what if this, what if that. And guys, this stuff takes time. This stuff takes time, so don't try and rush it. The more you look at charts, the better you're going to get. I promise. I promise. The more work you put in, the more you're going to get. So look at this volume today, though, gang. It was kind of awful. It wasn't awful, but there wasn't much volume. Again, we have important data next week. So we broke through the pre-market highs. Again, there's bullish. If you look at a stock and you're trying to figure out, are we going to go down or are we going to go up? And the market's open and you're watching it for the first 15, 20 minutes, it tells you a story. Now, you're going to get a little craziness in the first 5 minutes. So take the first 10, 15 minutes. Take 15 minutes and then see what's going on and really dissect it. Say, if I'm going to be short, what am I going to do? If I'm short, why am I going to be short? If I'm long, why am I long? Try and come up with a short. Well, I'm going to be short because I think, why? I don't really have a reason to be short. We held yesterday's close. We held yesterday's low. We blasted through yesterday's close. And now we're testing the top part of the range. Top part of pre-market range, which was yesterday afternoon's price action. And what'd you do? You blasted through it. I mean, and just you put a trailed stop, guys. Now, if you would have broke and closed, now the important part is closing. Now, if you have a 1 minute candle, maybe even a 2 minute candle, it might not be like you may close below it, but that's not telling you the story because that is like fractional. Your 1 minute, 2 minute. Pull up your 3 minute and 5 minute. Now the 5 minute may have. I have to look. All right, I have to look, but I don't think it did because this 3 minute, because the close is the close, no matter what time frame it's on. At the end of the day. Now the 1 minute though could close here. It could have closed because you have so many different candles. That's what I'm getting at. So like this is like if you have a 10 or 30 second candle. I'm sure they closed below this low. This is why you want to look at. You got to look at all different types of time frames. You got to look at all the time frames, guys and gals. Again, we teach this stuff real time. Ivy League Trading, YouTube.com, Monday through Friday for free. All you have to do is like, share, and subscribe, guys. 7:30 to 4. So this was textbook, guys, and so this story that here after the pre-market break, it's telling you that you're not only going to probably test the open, because I'm pretty certain they don't really care about opening prices. They just care about where does the market close. That's the most important thing. You can open up wherever you want. Doesn't mean you're going to finish the end of the day there. So that's why the open isn't too important. Now, you want to like know where it's at, because you just want to be cognizant of like the story of like, what's going on, because if you couldn't get through the close or the open yesterday, then that's a story there. We're not testing that upper range. But again, you blasted through it with vengeance. You pull back to VWAP. There's a second opportunity. Now, this is going to make you nervous. You're going to wonder, man, that was a big pullback. Off of what? Off of what? There's nothing there. You have no price action. This is what you need to be worried about. Your 429.50 area. All right? Your close from yesterday. Your low from yesterday. Those are the things you need to be worried about. The stock can do whatever it wants in between. And that in between is to try and get you out of trades. It is to psychologically get you out. All right? But look at this volume head here, guys. Now I'm gonna again pan this out so you guys can see it. So you had look at this volume, guys, and all you had here was people noticing that the close held yesterday. Yesterday's low held on a down day yesterday. Remember that. It was a down day yesterday. We opened up where we closed, just above the lows. We tested the lows, couldn't break, so now we rally. And you get this pullback here. You get this pullback off of this pivot high. And then we look at the volume. The volume is lower. The volume's like decreasing on the way down. Look at this candle. If it was a real sell-off and you got a couple candles here, you at least, to be worried. See, this is the line chart again. I apologize. You're going to want to see at least 3/4 of that candle sometime or another in the red, like pop up, like, and that's showing you, hey, maybe it's maybe this is a remove. So that I just wanted to get that out of the. I just wanted to show you guys a price action that I have saved, along with a lot of other playbooks. Because there's only so many ways that the market trades, guys. There's only so many ways, and you can look at it different ways. Like sometimes it'll put in a reverse, like it'll put in an actual pattern, like a reverse head and shoulders, or it will have a nice clean cup and handle. Okay, or a reverse head and shoulders, a ABCD pattern, which is kind of like this, A, B, C, D. That's an ABCD pattern. All right. So I wanted to bring this up because I want you guys to start to take days like today and build a playbook. When we get CPI, take a snapshot of the day before, the day of, the day after, whether you have one single one or wait till CPI comes out and then screenshot it like this. How I have the SPY where I have the 2-day action. Screenshot it like this. So you have the day before, the day after, and then if you want, take another screenshot of the day of, and then, or the day prior, and then the day of, which would be the day after, like CPI and Fed. And you're going to see, after X amount of time of doing this, you're going to notice that the market usually does the same thing. It only does so many variations of ups and downs. There's only so many variations that it can do. But stuff like this can help you. Knowing that you had bullish or bearish sentiment the day prior, only to not make a new low. And you close above yesterday's close and you push through it. Like, where's the next target? The open? The open's way up here. The high is way up here. So, again, and what happened? You went and tested it, put in your tail. So I thought this was a good lesson on playbooks, because I want you guys to start snapshotting this stuff so that you can go back and say, hey, this is off of like 3 months ago. We had a down day where we closed, or we opened the next day just about where we are above the low. So let's see if we break that low or not. If that low holds, then chances are the probability we go long, you know. Now, you're going to get these tails here. It's not going to be perfect, but you need to realize if you bounce back in the type of manner, like, look at this candle. You put 1, 2, 3, 4. 4 candles on the 3 minute with 1 pullback, 5, 6, 7. Like, you put almost 8 candles there. 8 out of 1 green candles. All right, on a 3 minute. You know, that's what, probably 20 minutes, you know? Well, if 3 candles is 3, 6, 9, you know what I mean? So you're at 20 minutes there, you know, at 6. So you're almost at 20 minutes. Like, that's time. So I hope that helps, guys. I hope that was a good lesson. That's one of them. What's the most reliable time frames for Head and Shoulders? You know what, bro? I'm going to tell you right now. A true Head and Shoulders pattern, you're going to see on the 1 minute, 2 minute, 3 minute, 15 minute. But you want to look at the 3 and 5. There are things about Head and Shoulders, cup and handles, that people ask all the time. Is this a cup and handle? Is this a reverse? Is this a Head and Shoulders? And the fucking thing's crooked. You just want to know that your neckline, you have a proper neckline, which, like, the left shoulder isn't, like, way up next to, like, if you go, let me draw right here. You want to see stuff like this, guys. You want to see tight price action, and it's going to assure you, like, listen to me. You're going to know when you see a pattern. You're going to know. Like, you can, like, I've seen it, guys. I've seen it where people are like, we got to reverse Head and Shoulders or this and that. And the things like this. You have a little down. All right, it's a little down, and then it goes like this. And the thing is just like the left shoulder is like this. Do you know what I mean? I don't walk around with my neckline. I mean, okay, this is diagonal, yeah. But let's just say if let me take this back. Let's just say if this right hand side of the head. Now I can make this bigger. All right, I can make this bigger. So, like, let's just say, like, that's the head. And then it goes up here, and then it's like this. Like that. All right? And then you get, like, I don't know, probably a down. Like, so do you know what I mean? That's not a reverse Head and Shoulders. In a sense it is, okay? But it's not, because you want your neckline, like, where's the shoulder? You know what I'm saying? Like, where's the shoulder going? Like, that's not a reverse Head and Shoulders. You want to see, I'm going to show you what a reverse Head and Shoulders is. You're just going to know when you see it. Now, it'll put in little weird ones at times that are, like, close, and then you're going to notice that they don't work for one main reason. There's one main reason to any chart pattern, guys. It's volume. Okay? Let's say on a reverse Head and Shoulders, this is going to take me 2 seconds, I promise. On a reverse Head and Shoulders, all right? Reverse Head and Shoulders, you have your left shoulder. All right, you have your head, you have your right shoulder, which is about square, and then you have this, which is your left head, right. You have your neckline, pretty fairly good, and then usually you'll have the breakout, the pullback, and then you get that. All right, you'll know because the price action is going to be tight. Like, the candles are not, like, this left shoulder isn't going to go way up here, come back down, and just get over the shoulder to come back up halfway, and then come back down, like, it's ugly. It's ugly. Sometimes you can play ugly ones, but if you get nice tight price action, okay, that form where it looks good. And the last time we had a reverse Head and Shoulders, I went on sale on the SPY, was like 2 summers ago, maybe like a year ago. They show up randomly, and it may take a little bit. It could take a morning. It could take, like, all the way up till 3 o'clock. It'll form all the way up till 3 o'clock. Usually it'll put in pennants. It'll put in a pennant, and then it'll, like, break down or break out and come back and test it. So the most important thing you want to see, if this is a bullish setup, what you want to see here, you know what? Let's go look at this. I got one for you. I got one. Let's see if I can go back to it. Google. I played a reverse Head and Shoulders about 2 months ago off of Google. Let's go to let's see if the half hour will bring it up. Because again, you'll be able to see it on different charts. I hope this is going to give me enough room. So like this, do you see this? This is not necessarily a head and shoulders, because look at your left shoulder. Your head is huge, and look at the neckline. It's way up here. It's kind of there, but look at this. Like, this is not, you want a V on it, which is going to be nice, tight price action, and but I'm going to show you guys because I have it. We have one. I played it. I played it on Google. And the one thing you want to watch is volume. If it's a bullish setup, on your pullbacks, you want a decrease in volume, and when you make that upside, you want an increase in volume. Now, on a reverse head and shoulders, okay, you're going to see the volume on the right side of it usually. You can see it throughout, but on this right shoulder, you're going to see an increase in volume on the head, on the green side, where this head comes down to the neckline. If it's bullish, obviously, because it's a reverse head and shoulders, the buying is going to be so much bigger than the selling over here. And then you're going to get a light pullback with volume that's minimal, and then another increase in volume. And that's when you can reassure that you're going to break it. And then you're going to get that retest. And that's when you pound the table and take that mother sucker long. You can get it on like 2-3 day type of thing. Like you got it on Tesla. Tesla's one of them. It put in a nice reverse head and shoulder. You can pull it up on the hourly. They happen intraday. All right. They happen on the dailies. They happen on any time frame. But the thing is you can pull it up and still see it on any time frame. On any time frame, you should be able to see it if that is a pattern. If it's a mess, then you're obviously probably not going to see it on different time frames, and it's probably not the pattern. Because once you start to see them, you're going to know, okay, this is it, this isn't it. All right, because the price action is so clean that like this left shoulder is damn near to the head. All right, so you guys see this? You know what I mean? See how the shoulder is like damn near to the head? My shoulders ain't up to my head. Like the head it barely clears it. Or no, I'm sorry, not that line. But like you see how it just goes right here, like way under the neckline, and has a small pullback only to rally and then fail. See how it failed there? Because it's not a reverse head and shoulders. All right, and if I go to the volume, look at this sell volume right here. I'm going to go back because I want you guys to see the sell volume on the way up, like, or even when it starts the way down, it's telling you that that's not what it is. It's tricking you. I want to just delete this because I'll forget about it, but I think I'm getting close to it. It's right here, guys. Google put in a reverse head and shoulders and had a small rally up. It wasn't like it didn't extend for like a long period, but it gave you like a 2-day rally that was nice and clean, and I played it specifically because of the reverse head and shoulders that I seen it on the 5-minute, I seen it on the 1-minute, I seen it on the 2-minute, 15-minute. Like, you'll be able to see it on different time frames, and it'll be clean. And then you look for your volume. Once you get the price action, you just want to go check out the volume on it. Let me pull up the hourly. I'm going to give you guys a perfect example of it. I think it's right. It should be right in here, guys. I'm going to see it as soon as I see it. I'm going to know. Man, this sucks. Where am I at? So 7. Oh yeah, it's not this far back. So 9. Okay, so I probably can pull like this. This is not a reverse head and shoulders. Like, look, you have your left shoulder, you have your head, and you have this little ass right shoulder. Only to do what? You're not going up. You're going sideways and then down. So it's important. And look at this sell volume. You know what I'm saying? Like, look how big the sell volume is. That's telling you that that's not a reverse head and shoulders. Because the volume is going to show you. I promise. I promise you. I almost want to say it's not this because it was tighter. It's not that because it wasn't that far back. It's so clean, guys. Google put in a clean reverse head and shoulders. Okay, 3, 4, 5. Okay. All right, we're getting somewhere now. We are getting somewhere now. Man, I don't know if I'm going to be able to find it. It was so clean. How long was it? In December? 9, 10, 11, 12, and I'm on Goog. So I don't want to get stuck on this. But you see what I'm saying? Like this here, left shoulder, or where was it? I just seen one. It was like left shoulder, head, right shoulder, and then fail. So is this it right here? No, because it pulled back. There was definitely, Google put it in. I mean, we can always go to Tesla. Tesla put one in. And anyway, I played this reverse head and shoulders on Google because it was clean. It was perfect. I had increase in volume on the way out to rally. Like it just, everything lined up like great. So thank you for bringing that up because that's also so important, guys. Like knowing what you're looking at is what you should be looking at. You know, like here, your left shoulder, head, right shoulder to rally. Well, the shoulders are higher than the head. You got, look at this, look at that sell volume. I can see it from here. You probably can't, but yeah, Google put one in, and I want to say it might be here, but I don't know because it didn't drop below it. It rallied for like 3 days. So, I don't know. That's unfortunate though. Damn it. It's brutal, man. Because I really wanted to show you guys that. Again, we can always go to Tesla. Tesla has one on it, and you can pull it up on an hourly. Right here. There's the neckline. See how pretty that is? You see how pretty that stuff is, guys? And you see how it also pulls back to retest? Like, you see look, you don't have one single red volume on the right side of the head pulling out of it. You have an increase in buying. Do you see, man? You see what I'm talking about? This stuff takes time to learn. All right? Left shoulder, head, right shoulder, and then what do? What do? You break out on nice volume, which, you know, this selling was a little eerie, but you pulled back to test it. And what did you do? You put in a double bottom. You put in a double bottom right on that neckline, and then it was for GM, which, thank you, because I'm getting it. Look at that. You know what I mean? So you'll know when you see one. I would actually consider this like an ugly Head and Shoulders, but the right side of the head, like I said, look at it, not one single red candle, guys. Not one single red candle. Look at the MACD. Look at this down day. All right, MACD puts in a low, comes up, puts in a low, goes down. The MACD's coming up. You put in a new low. Your MACD puts in a higher low. That's bullish divergence. That's another tool to help you, to show you that sentiment, like the money, the price action, it's there. The energy is there to go to the upside with the MACD, with your volume, with the candles. You know, you just got to piece all the puzzles together, and this thing never looked back, guys. It hasn't looked back since. So thank you for that. So let's get into it. Let me get a sip of coffee real quick. Real quick, guys, too. Cup and handles. Okay, you want to see a decrease in volume on the left side of the candle. I don't know if I have like a drawing tool on here. I don't think I do. I wish I did. I'll have to go like download an app or something and get one. So on a cup and handle, as it curls down, you want to see the price action tight, where it's not like big candles, up candles, like where it's like down, up, down, up. You just want to see steady candles, okay? You want to see steady candles going, like forming it, okay? Like this, all right? You got a candle, candle, candle. Like they're not going crazy. Like they're not like this, and then like this in a down direction. I mean, they could be like this because it's nice and tight, but they're not going to be all over the place. Like it's going to be smooth. And you want a decrease on the left side of the you want lower sell volume on the way down, and you want to see the right side of that cup as it's going up. You want to see that buying volume greater than the sell volume on the left side, and then the pullback. The pullback's actually the big one, because when you get that pullback, that's when you really, really need the sell volume to be like small and confirm what you're seeing is correct. All right. And then you're going to get a massive upside. Apple put it in back in 2020. It was my first cup and handle. I think well, it's not like my first, but it was my first one that I seen that was just so clean. And these are bullish patterns. We were in a bear market, so you're rarely going to see bullish patterns. So you're going to see more bearish patterns than you will bullish. Now, once we get into a bull market and this is like over with, then you're gonna start seeing once like we're in a bull market again, you're gonna start seeing that stuff. You're gonna start seeing small sell volume, and then bigger buy volume, and then like your pullbacks are just gonna be the sell volume on them are gonna be smaller. You know, we're in a bear market, so you will see them. It's just rare. That's why we haven't seen bullish like reverse head and shoulders, cup and handles, because we're not in a bull. We're not yet. We're getting there, but we're just not in a bull market. So think about that as well. So you just want to like kind of right now we're in an uptrend. So yes, look for bullish patterns. You know, to help dictate the upside in any move that you want. Guys, huge news. Colin, my guy, I appreciate you. I'm gonna message you, Colin. I'm gonna message you on Facebook. I'm gonna give you my number and stuff. I want to talk to you about a couple of things. So thank you for leading me into Tesla. So let's go to Tesla. I hope that SPY was helpful in getting a playbook together. All right, taking that down day, having it where you open up. Like I would just take a picture of today's price action and yesterday's price action, save it on your computer because you can always you'll build them, and then you can go back and say hey, and then you know to put the trade on. Don't give a shit what your mind tells you. Unless, you're seeing something like an increase in sell volume and chances are it's probably going to break. Like you don't break up above the open price or something and then it's off. Then you're going down. But that wasn't the case. We blasted through the opening price, which was yesterday's close. We blasted through it. So it told you on that pullback, you got to get long. So I hope that helps. You guys got to, playbooks are important. I have them for Fed Day, CPI Day. I have them for daily intraday patterns. Like I have them. I have so many of them. I have ascending wedges, descending wedges, like head and shoulders. Like I have them all, and it's over here on this. I have some on this computer. But. So it just helps, you guys got to start developing a playbook. So when we come up to this Fed Day and CPI, you should probably just take a picture of the whole week because we get CPI on Tuesday, we got Fed Wednesday, then we get PPI, so, but I think CPI is the main one you want to look for. I mean, by all means, take PPI, but again, take the day before, the day of, and then the day after, and then you can use what the data was that gave you the following day's price action. All right, so you guys want to start like saving days, and so you can go back and look and say, hey, I've seen this pattern before, I recognize it, I'm going short or I'm going long. Big news, guys. So Tesla, GM, they had a thing, I think a space thing on Twitter today or something, and they announced at the close that Tesla or General Motors is going to be able to use their charging stations like Ford. So let's talk about this, guys. Tesla sold off to $100 some. Do you know how bad you've heard this talk about Tesla? How they're so like their price to earnings and this and that and this and that. Okay, listen, all that shit is past data, not future. Okay? You're right in a sense. You're right. They're not making the money that justifies the case of the stock price. But what's going on underneath that you're not seeing? That the fund managers, that the guys on Wall Street who have guys from Tesla, they meet. You have these. I know the goddamn name. Like I'm just having a brain fart, guys. These guys that do price targets and stuff like that, who do the work for like semiconductors or automotive or insurance or construction. All right, the analysts. There's a reason why Tesla put in the pattern it put in and extended well before this. All right, there's a reason why. All right, look what Tesla's done. Okay, and then look, I want you to look at Tesla at this big upside, and then we're going to go look at Ford. Guys, Monday through Friday, ivyleaguetradingyoutube.com. Like, share, and subscribe. Guys, come join us. 7:30 to 4. We trade live every day. I have been calling out Ford and automotives literally for the past 2 weeks. I've been eyeing them up. Look at Ford's. Ford's putting in a bullish pattern that's telling you, hey, something big is going to take place. Look at this. I've had this up. I've had this up last week. And I've been bringing it to members of this channel and saying, guys, this is something I'm looking at. Because you guys can always post whatever you want. We're a team here. We're a team here. And this is the only way you're going to be able to make it. If you're trading by yourself or if you're at work or whatever the case is, join in. And we do these lives at night. When we start bringing some people on, we'll start going through some ideas, and we're going to come up with a game plan the night before, and then we get our game plan in the morning and see where our ideas are at, how they're looking. I've brought this up. The guys and girls here know this. I've been bringing Ford up. I've been bringing the transports up. I've been saying, watch them. Look at this wedge. It's getting ready to break out. These are my upside targets. All right, these are my upside targets, guys and girls. I'm actually going to put one up here where this base is because I thought I already had it there, and I can't because I have the square. So, again, it's so important for you guys to realize what it is that we have going on here. We have experienced traders, okay, and you're going to find so much use. You're going to find so much use out of this channel because we've given you Ford. We've given you Baba. We've given you probably stuff that I can't even remember. You know, AI, AMD. We told you look for AMD on the upside last week. We played AI. We played C3I on the big breakout day. All right, it's just it's just I have to just like get that through your head that you don't have to spend $1,000, $2,000, $3,000 a year to be in a group to trade with and to get knowledge and go through lessons. Because guys, I try and go through lessons every night. That's why I do this. I didn't do this for so long, but I'm like, God, this industry is so corrupt. It's so corrupt. Okay? Watch who you give your information to, please. If they're asking for your phone and number, or here's a trial, or this and that, give us your phone number, your email, this and that. Guys, they're probably also data brokers. And they want your data because they can make money off of that where it is of use to them. Okay? Like Ben Malice said, question what the other person's alternative is. Okay, this is what I do. My alternative here is to create a place where people that don't have a lot of money can come learn to trade, come get some ideas, and don't have to worry about this $1,000, $2,000, $3,000 bill every year or every month. And they don't even get the education that they need because the people are worried about the other people who pay them $5,000, $10,000, $15,000, $20,000 and more worried about them than they are the actual people who help build that business. Okay, that's what I'm trying to build here. All right, it's what I'm trying to build here is that normal people that are trying to get ahead should be able to have a place that they can go to, whether it's one-on-ones, okay, whether it's tutoring, whether it's a group, you know, and you don't have to kill yourself to be able to just get the education that you need. Who puts a value? These people put a value on it because someone else charges something. So they say, well, I'm going to go off of that person's. Nah, fuck that. We do it for free right here, guys. Right here. Like, share, and subscribe if you could. It's a lot of work. I'm a one-man team. All right. So again, we brought up Ford. We've said, guys, watch this. And look what we've had. Look at the volume. This is helping you. You had an increase in volume through the break. You had the pullback on... It was technically lower volume because it's not higher than the break. And then what happened? It held. And now you get Tesla, GM, Ford. Listen, let's go to Tesla. This is what I want to talk about. So many people talked about the PEs. Oh, Tesla shouldn't be up here, this and that. Bro, Tesla is doing exactly what it should do. Just like I tell you guys about the market. The market wants to go up. I'm sure there's a reason for it to go up. It goes down. There's a reason why it's going down. The market, they don't just move randomly. All right, there's always a reason why. Because what that reason is what influences people or computers, the people that are in control of the computers, to make a decision in up or down direction. Okay, again, if we're waiting on something like we're waiting on Powell and CPI, we're probably going to trade sideways. You're going to get some ups and downs in that range, but it's probably because we're waiting on something, and we are. And this is, do you see? Like, everything I'm saying is obviously correct because the SPY hasn't broke the level or necessarily broke down, because there's no reason to. There's no reason to go up. There's no reason to go down just yet. Just yet. All right, so everybody says the PE, they're this and that. Okay, listen, just like CPI, just like the Fed that goes off of the data, everything is past data. And you guys should know this. Everything is from last month or last year. When you get month over month, year over year, it's from the year prior or month prior. The market is forward looking. Let me talk into the mic. The market is forward looking. Okay, so if the market's forward looking and it's putting in patterns that tell us whether we're going to go to the upside or to the downside, that reasoning is probably going to show itself eventually. Just like Ford, I showed you on the daily. It was telling you previously that something big is in the works and this thing's probably going to rally for a while. Tesla, same thing. Inverse head and shoulders, rallies its ass off to the upside, and then what do you get? You get Ford. A week later, you get GM. All right, so this stuff just didn't happen overnight. I'm sure there were already talks. There were already talks, and this type of stuff was in the works because these analysts, this is their job. Their job is to communicate with the company. Okay, what's our path forward? What are we thinking about doing? And then the analysts take that idea back to their shop, and they say, man, they got some stuff under wrap. Like, they got some stuff that they're looking to do. We might want to start pricing that in. And that's exactly what the hell they did. Just like Meta. We can go back to Meta. And this is the point about Tesla that I want to make. Everybody was so down on Tesla because electric vehicle, they're a car company. Well, the fact is Tesla is necessarily not just a car company. Yes, they sell cars, they sell solars. But they got SpaceX behind them. They have so many other things, whether it's incorporated in this or not, there is a premium for potential. Okay? You have one who's landed a rocket back on Earth? The owner of this company was the only one to do it. You know, or put the pieces together to be able to do it. I'm not saying he just did it himself. There's a whole team at work there. So if that guy is so good at putting a team together to like advanced space technology, who's to say he can't change the automotive business, which he has. And we all had a chance to grab this at such a great price. But when there's blood in the streets, you come up with every reason why this should not be bought. It's overpriced. And then what happens? Just like Meta's Oculus, what happens? Apple comes out with one. Mark Zuckerberg said, I told you. Because when it's new and it's not working just yet, you're just naturally human nature is to come up with any reason why it shouldn't work or it's not a good idea or this and that until it proves itself. Well, then it starts to prove itself, and the chart, before it proves itself or before something happened, the analysts and the chart and the money flow tells you prior that things are in the works and maybe you should pay attention. Maybe this is why you should get an education and not have a bias. The only bias you should have when trading is what's my reasoning for upside? What's my reason for the downside? And I'm not talking about necessarily sentiment, which is fine. You can use it, but what is the chart telling you specifically? Can you come up with an intraday reason to be long? And can you come up with a reason to go short? And if you can get them both ways, which one has more signals for which? Do you have more signals because you have volume, bullish divergence on the MACD? You have your RSI, which is still low, and you have a gap up, or like a gap that's up above you, and then all you have is like two candles that are red for the short side. Chances are you probably should be long. You've just came up with 5-6 different reasons why you should be long and only two candles to stop you from being long. So start thinking about things like that when you guys are in trades. So, and you need to know your price targets. Where are you going to take profit? Is it 50 cents away? Is it $1 away? Is it $10 away? When it's sitting at support and you got a lot of room there, chances are you and everybody else, you're going to get behind that buying because the risk to reward is there. That's the other important part, the risk to reward. If you're buying right at resistance, chances are that trade's going to go red on you. All right? Unless, there's all kinds of different things that we can come up with. Fact is, you buy at resistance, chances are it's probably going to go red and you're going to have to deal with a drawback or you have a losing trade on your hands. So, Meta changed the game with the Oculus. What did Tesla do? Tesla changed the automotive business as a whole, gang. You got the two biggest companies that finally just gave in and said, all right, you've done it. You've not only done it, but you've done it right. Just like you did the spaceships right. Just like how you had them land back on Earth, you have the right setup, the right technology, the right things put in place to have this system be, which is the charging stations. These charging stations for Ford and GM have not worked. Like they were a hassle and they just couldn't get it. Well, guess what? Tesla got it, just like they got their rockets and all the other innovation that Elon Musk puts together, him and his team, because it's not just him. I appreciate you, Con, I do. But am I making a point here? Like pointing it to the Oculus and how when it first came out, we didn't think about practicing healthcare and doing surgeries or having a building to look at for architects or being front stage at the court through your Oculus at a basketball game or baseball game. Nobody really thought about all those things until the product was brought about, the innovators came about, and then now what happened? You got Apple trying to get in on it. So Meta changed the game there when it was down here. Everybody was talking so much crap, and it's okay. And you know what? That's justifiable. Just like Meta, just like Meta. And that's okay because the product hasn't showed itself. But what did you have? You had a reversal, which we caught this reversal. All right. And then you had it not break down. You, in fact, had your reverse head and shoulders only to rally its ass off because the two biggest companies in the United States that make automotive finally gave in and said, Tesla, we're done. We're wiping our hands. You own this space. So that is future revenue there, guys. And that's what nobody was talking about because we didn't know. And it's okay. It's human nature. But just question, guys. So when everybody's talking about something going up, like crypto, NFTs, this and that, you should probably be selling. This relates right to Warren Buffett's thing. When things are down and everybody's talking bad about something, and you want the chart to help tell the story too. If it's going up and everybody's telling you why it shouldn't be going up, it should be going down, chances are there's a reason, and give it time. That reason's going to show its face. This is huge. This was huge news today. And this is on the back of Tesla already pricing all that in. Because the analysts knew, the fund managers knew, the professionals that do this for a living knew. Because they put in the work. They literally talk to them and want to know what's going on. What new ideas do you have? What's in place? They get all that information. We don't necessarily get it. You could probably sense it, whether you have a Bloomberg terminal or different articles. Maybe you read or you go online to a forum and you're in the automotive. This is why in the institutional world, they have people that just specifically work on one thing. You have people that do semiconductors. You have healthcare people that just do biotechnology things, or biotech. I'm sorry, biotech. They just specifically work on biotech. Some people just specifically do automotive. Some people just specifically do real estate. Okay, at these places, at these mutual funds, or not mutual funds, but hedge funds, they hire those people, the best of the best, so that they know at each sector, they have a professional at each sector, and that's why they have analysts in general. That is the purpose of it, to have a professional in that business that can help them relate the news or the story and what's going on and how it should affect the stock, whether it's down or up, whether it's good or bad. They hire professionals to tell them what they should do. Not necessarily to tell them what to do, but they inform them, and they're also traders too. A lot of them, like Wheels. Wheels is he has his own. I'll have to get his information up. You can find him on CNBC. He's on CNBC all the time. He's an automotive guy, and he's smart, but he's smart too. I learned a lot from him. And you'll see his nickname is Wheels. I have to get his name for you. As a matter of fact, Let's see this actually. I'm gonna show you. I want to give his because I'm talking about him. I want to put it up here. No, the compound. No, come on, bro. How did I know? I'm just going to go to it. You know what? I'm just going to go to it, guys. All right. I'm just going to... Come on. I don't need my AI shit right now. It's just important because I want you guys to watch this because you guys can learn a lot about the VIX. A lot of stuff. You guys can learn a lot of stuff, guys. All right. You guys can learn a lot of stuff. Let's go to it. Live. Where's the lives? Let's go to home because it's going to be there. It's probably going to be here. Okay, here you go. You get this section right here. He's going to be up here, guys. I'm going to show you guys who he is. Just so you guys, this guy here is another person I really like too. This guy here, he's also one that I like. I love this guy. He's very smart, bond guy. All right, I'm going to show you wheels. He's coming up soon. These two work at the NASDAQ. This guy is also smart too. There's like 3 or 4 of them that I really like. I always take their information in. He's one of them. And he's also another. There's actually a lot. It's all about, go to the compound on, and I'm going to promote this. There's Bob Sani. Here he is, right here. This guy right here, gang. This guy right here. You guys are going to know his name. His name is Nick Coles. Nick Coles is specifically an automotive guy who does this guy right here. And you guys will see him on CNBC. His nickname is Wheels because he does automotive stuff. Very smart guy. Very, very smart guy. A lot of valuable information there. All right. Joe Terranova. And then they have another person on here that I really admire. I know his name. I just can't think of it offhand because I have a brain fart. There's the bond guy again. That was a good one. So, you know, you got to, and this guy here, this guy's a semiconductor. All right, this guy is specifically for semiconductors. You see what I'm getting at? How each person plays a role for a hedge fund or for the institution. They're hired specifically for a category that they're good at. All right. My one guy's right here. This guy here. This guy runs his own. He runs his own fund, and he's very smart. Do you want to know where I got the fact that the 2-year has never peaked before the low? Was from that man right there. These guys are the professionals, and you got to learn from them. Write their names down. Tony Dwyer. Tony Dwyer's the fucking man. Excuse my language. So if it wasn't for these guys, this is where the education comes from to me. You know, you got to take pieces and not start understanding the game. Know who's what. Know who is going to provide you with the best information. And you just piece it up. You know, you don't... Certain people, again, like I said, certain people are, you know, known for certain things. Wheels is an automotive guy. You know, I'm sure he's been in on this run. And he also said when a stock is going up, you don't fight the trend, you just buy it. And if you'd have just bought it here, thinking that it's over with, you're coming to resistance. Oh my God. Dude, look at this strength, guys. Look at that volume. Just look at your volume. You know, so that's one tool. Just look at your volume. If the stock is going up, especially into resistance, then you should see that volume bar, if it's green, like just coming down. Because the buyers are not buying as much because they're anticipating that level is going to be resistance. Like it's a major level that is going to hold. But they weren't worried about it. Look, they're still packing it on. The news came out. Still packing it on. So this is just one part of the market, you know. One aspect. It's a lot. I'm telling you guys, it's a lot. But over time, you're going to get it. All right, you're going to get it, man. And like I said, I'm just trying to build something here that provides education that you don't have to pay thousands of dollars for. Yeah, man, Con, I appreciate you, bro. I appreciate you, man. So, but yeah, big Tesla news, guys and girls. So yeah, we have that. So today we watched Carvana. Carvana was on the list because of the not upgrade, but the forward guidance that they raised guidance today. All right, Carvana raised guidance. This level here, this $20 level was a major level. It's already up on my screen. It's been up on my screen because I played it. I played Carvana a few times. Just like CRM, which is Salesforce, it puts in when it trades, it can put in some pretty good like intraday channels that really help with, like, where, let's just say, if you open up and you sell off, you put in a base and break below that opening price where you put in a base, and you retest it. Usually it's good for, like, that final test is the downside. And there's certain stocks that just put in really good patterns, and Carvana's one of them. All right, I was watching BAOS. I'm going to get into that lesson real quick, but Carvana, short squeeze. So what do you want to look for tomorrow? All right, you had a lot of volume today. Now you just want to see, does the volume hold? Does this 2350 level hold? Just got to see if the 23, at worst, you want to see, these are your levels. I mean, 2180, but really 20. Let's see if Carvana turns back around on light volume, pulls back on light volume, and then, I don't know, Monday or Tuesday, you get a rise. Maybe if CPI comes out decent, or this is Monday, this wouldn't be Tuesday, but look for the pullback. Look for the pullback. See, this is a short squeeze. I got to go to the daily chart and all that stuff. But yeah, of course, it's above all moving averages, like I figured. So you just want to jot down your resistance levels. This is one of them. This is going to be one of them. Let's see here. Doesn't have to be exact. I mean, you want to get it the best you can. But that's, of course, because I have a line. I'll jot this stuff down in the morning. I want to get into BAOS real quick. It never necessarily gave us our follow through that we were looking for. All right, it just couldn't break this level. It's either not ready or traders just weren't. I don't know. It had volume. Look at the volume today. So I'm not sure what the case was with it. It's just, maybe it's just, that level. Again, this is a level. Maybe it takes time and it just slowly goes up, or it just curls itself back on down. I was hoping with the MGOL or whatever the stock was, I don't have it written down. I have it written down somewhere. That would give that. I was hoping that was going to be able to give us maybe a day, or a week, or a few days worth of small caps. So I tuned into this thing in the morning. I was watching it. And I was really hesitant on this thing. It just, to me, it didn't feel like it wanted to break out and extend. All right? It didn't want to extend. And I never even, excuse me. Oh, sorry about that. It never even got to the point where I went and placed an order. Like, as far as, like, all right, we got strength. We got some momentum. Like the sentiment to me was this thing just, it just couldn't, it just didn't have it. It just didn't have it. It tried, and then it tried again in the afternoon, and I almost did in the afternoon. I almost got into it, but to me, and I was right. What the senses that I was sensing, was right. I was right. It never made it. It just never made it, and other traders must have felt that way because it just couldn't break the highs. Couldn't break this level. So let's go over to the afternoon. All right, again, this is a 1 minute. I use 3 minute, 1 minute, I use 2 minute, I use 5 minutes, I use 15, I use them all. Here was the afternoon. So if I pan this out, I looked at this thing to see, all right, because I knew if it got to this area, I even set an alert actually. I set an alert for this stock down here, I think at like 10:01 roughly or something. Not no, it was 9 something, but I set an alert and it never closed below this. So when I never got that alert, I looked at it this afternoon. So I tuned in, it hit VWAP, got rejected, and I think I tuned in right here. I'm like, maybe it tests this, the low that it puts in and it rolls over, maybe. I don't know. But I'm still going to keep it on my watch list in case it decides to go in the afternoon. It did make a small run, but you had to be on this thing. Like, you had to be, like, this is not, I wouldn't say this is a smart move. All right, you had an increase in volume here, but you're still under VWAP, and it showed you twice here they couldn't break out to new highs. All right, or once. It couldn't break past this. It broke past this. It showed you twice. It couldn't break past the pre-market high during market hours. Like, it broke past it, but look at that. Where'd it close? It closed below it. It couldn't break out and hold. So, it tries again. Nothing. Fails. VWAP fails. VWAP fails, but holds up, and you get this small run. You got the small run. Couple traders were in here. I was here looking. I'm like, man, there's only 5-10 minutes left. I really don't want to get in this thing and have to be limit ordering out and like worrying about like it breaking back down. So I never even put in an order to try it because it didn't show me that it had strength to be a buyer. So I could go through some lessons. It's kind of late, but this is me, sensing that I should not be in it. And I wasn't in it. AI was another one. All right, I have a pretty cool lesson for that one. And the lesson is your resistance is right up above you. And if you want to be long, okay. But you can't get long here because 37.14 to 37.66, like there's no profit. Like what? Like you just can't, it's not what I do. Now if the stock's down here and it's starting to curl, then maybe if it's got like a big increase in volume, like look at the volume, guys. The volume just wasn't, look at the sell volume compared to the buy volume. So again, use your volume. Maybe this thing just has to sit. Maybe it's putting in a pennant, Maybe this thing holds up for a day or two and then the shorts get tired and then you get the lift off. We'll wait and see. AI, I looked at it. I never took it because of the main reason that, is that my profit target was less than my risk. Like I would have had to give this stock technically down here to 35. If the stock's up here at 37 and my resistance is also at 37, why would I be long it? So that's risk to reward, guys. And this is probably why AI was not in play today. This is why there was no increase in volume. Because it's at resistance. There's no room for a move. There's more room for a move to the downside than there is the upside. So you probably want to be short. So these are the things that you're going to learn over time. It takes a while to learn this stuff. Like look at this. All right, there's a lot of structure in here. And look where it rejected. You see that level? So if it reclaimed that level on an increase in volume, then we got a different story because it broke resistance, and now with an increase in volume, it's more than likely going to turn it into support. Okay, so I hope you guys can understand that. I don't think it's too hard to understand. If you guys have any questions, post them in the chat about any of the charts we went through. Again, the meta relating to Tesla, the big companies are given in. So you can talk all you want about backwards looking PE. They don't make much money. Well, guess what? There is a premium to pay when you just take in the two biggest car manufacturers or the two biggest companies in your sector. You just got them pretty much on your knees and you have them in a submission hold. And they're giving in. That's important. That is what's being priced in. Okay, because that's future growth. That's two of the biggest companies that have been here since the 1900s. The 1950s, I think, is when Ford first came public. Did you guys know that? Did you guys know that Ford came public in 1950? Imagine if you guys had some stock from back in 1950. How rich would you be? I think that's when they IPO'd, was around 1950, in 1950s. Fun fact for you. You see how much I know about the market? So, but again, that just takes time. So, this was AI. We looked at AMD. AMD was nice. We had a member hit AMD to the upside, grabbed his calls, took his profit at resistance, as he should. There's your resistance. Easy to see, guys. Easy to see. Okay? It helps if you also scan back. Like, if you have your screen and it's just like this, you don't have a sense of what the stock's doing, like what's left to you. So you're kind of like putting in a whole thing. You want to actually try and have it to where you can see some of the price action prior. Whether you do a chart like this and you have the 1 minute, 3 or 5, 15 and daily and have different time frames, I do it from time to time. Sometimes I'll focus on like a couple stocks at play and I'll just pan it out like this. I'll have it like this. It starts doing what it's doing. I'll pan it out a little bit. So I can see, all right, I know in my brain, which is going to make it easier for me to push the buttons at the right time. Resistance, 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 broken. Resistance, resistance, broken. Support, support breaks. What happens? It becomes resistance. Bang. And that's when you got that move there. So you circle on up. You're going up to test it again. Can we break it? Nope. But we did hold. We did hold this level. This is an important level because this was your pullback to test the 121.85. So you're going to want to keep this pullback on the resistance on this pullback on your chart. Not to say that it's not going to break, but if you put in a double top here, chances are we might roll over, or we're just going to sit sideways and wait for CPI and such. So it was a good trade by a member. He caught a nice long, and this is why. I mean, technically, you should be a little nervous here. Like, if you're getting long here at 117, your first area of resistance is at 119. So that's a $2 move. What are you going to give it? Let's look back. Let's pan the chart back. So technically, I mean, you're at support. This is a key support level. So you do want to be a buyer and then give it to this pre-market low at 16. So you're giving it $1 to make 2. That's a 2-to-1. That's not bad. 2-to-1 isn't bad. You're on the right track. That's how you guys got to start looking at trades. That's how you got to start looking at the trades, guys. So we broke off. We pulled back. Now do we start extending? That's the question. I'm going to be looking at AMD tomorrow, and from now on, I'm going to keep it on my list. I hope this stream was helpful, gang. I hope it was helpful realizing that when you get a bunch of negativeness about other companies and such, and the chart is telling you otherwise, like how to be bullish, you really want to just make your own opinion. Look back at Meta. Look back at Tesla. They changed the game. They have taken a product and put a stranglehold on other companies to say, get with it or get broke, I guess. Apple's not going to go broke, but they gave in. They came up with a product. The product worked. That is not necessarily supply and demand, but that is business in a nutshell. Seeing a problem or providing a solution to something, providing a product that you see can help and be of use, like us here. For people that don't have a lot of money, that do trade, that want to buy and invest, come up with ideas, maybe get educated. It's not going to cost you a lot of money at all. In fact, if you come here, it's free. The only thing that we do ask is if you bring some karma, hit the like, share, and subscribe. All right? We're not selling your information. We're not data brokers, We really want to try and build a place that people can come to and don't have to worry about, especially the times that we're coming into times, guys, that you got to worry about if your job, like what sector you are in with your job, and if your job is going to be there if we go into a recession. What are they going to start cutting back employees? Does that mean you're new, you're going to get cut, or you've been there for a long time and you make a lot of money, or you make good money there and they may want to scale back? Maybe you're on the list. This is why you got to get an education and have something to help you. You can fall back on it. If you're new, don't expect yourself to just fall back on it 6 months into it. You got to give it a little time, but you got to start now. You guys got to start now. Because you're coming to a time where every earnings call that I listen to, I get the same result at the end. That result is the unknown of what's to come with the economy and these interest rates that are going to filter through. I've showed you guys charts. I've had a chart that I've been meaning to show you guys. Okay. What's this chart? This chart is this. What is this? This is your delinquency. Okay? Credit cards. Student loans. It's your mortgages. Okay? Auto loans. Alright? Look at this, guys. Especially the auto loans. That's not good. There was a lot of shit cars bought at a high price that these people just... The cars are broken. They don't want to fool with them anymore. They bought them at such a high price that they can't afford to fix the car, so they don't make the payment. You know? Now these people at these cars are thinking about, man, maybe I should get an LLC and what am I going to do about it? Maybe they're not worried about their credit. I don't know. But look at the credit card, guys. Student loan. This is only up because of the laws that were passed. This is probably going to head right on down with it. I assure you that. This is why there was, that's why it's been flat and the other ones are leaning downward. All right? Or that's mortgages. I'm sorry. So, take a look at this, guys. This chart could possibly get worse. Could only probably get worse, gang. That's it for tonight, guys. If you enjoyed it, please, if you've learned something, if I've brought you some value, if you could like, share, and subscribe, even better. Come join us in the morning. Come up with a game plan. Provide your ideas, because we have a really good thing going here, guys, and we're making money. And what else are we doing? We are not losing more than we make. We lose very little, and we like to make a lot, okay? We know what we're doing. I know what I'm doing. We're going to get some people that are new that may not, but guess what? We're going to get behind them. We're going to teach them. We're going to, give them the best support that we can, So watch out, guys. Don't get lulled to sleep. There's still opportunity here. All right, there's still opportunity. Watch for a gap up on Tesla. I'm sure that may happen. I mean, they've just surrendered, pretty much. So that's all I have for you tonight. I hope it was a good live stream. I hope you guys were able to find it enjoyable. Like, share, subscribe. Again, guys, stay healthy, stay green. I will see you on the next one. Tomorrow morning, 7 a.m. live. Ivy League Trading, 7:30. Ivy League Trading, YouTube.com. I'll see you there. Like, share, subscribe. And we'll see you in the morning, guys. Have a great